Costco operates in a highly competitive retail market but has managed to build a remarkably consistent and successful business through a straightforward yet powerful model. At its core, Costco runs large warehouses with a limited range of products sold in bulk and keeps its setup simple and no frills. However, this simplicity hides a sophisticated economic system that combines steady income from memberships, very low operating costs, strong purchasing power, and a trusted private label brand, Kirkland Signature. This combination drives customer loyalty, reliable cash flow, and competitive pricing, even when facing inflation or tariffs. In fiscal 2025, Costco's model proved its strength again with sales growing 8% to $275.2 billion and net income reaching $8.1 billion, alongside continued growth in memberships and fee income. The business is primarily driven by membership fees from Gold Star and executive programs, which are the main source of operating profit, allowing Costco to keep product markups low, around 14% on national brands and about 15% on Kirkland products. This low pricing builds trust and encourages customers to return, reflected in renewal rates above 90%. In 2025, membership fee income grew strongly, helped by a fee increase in the US and Canada and more members upgrading to executive status. Even without the fee increase, fee income rose about 7%, showing solid organic growth. Costco's approach focuses on carrying a limited number of SKUs, about 4,000, compared to the tens of thousands found in supermarkets. This makes buying and logistics simpler, speeds up inventory turnover, and keeps operating costs low. Their warehouses prioritize efficient pallet flow and high throughput rather than creating an inviting ambience, which helps maximize productivity per square foot. The Kirkland Signature private label plays a key role by blending national brand quality with strong value, helping offset the impact of tariffs and inflation. Costco can easily adjust its assortment, source locally, or promote Kirkland alternatives when national brands face cost pressures. With an expanding global footprint that will reach 914 warehouses by FY 2025 and plans for 35 more in FY 2026, Costco gains negotiating power, diversifies sourcing, and grows its membership base worldwide. Membership renewal rates are very strong, around 92% in the US and Canada and about 90% globally, showing high loyalty even after recent fee increases. Costco keeps operating margins intentionally thin but balances this with low selling costs and rapid inventory turnover, supported by fee income to sustain growth. Kirkland Signature has become a major franchise, trusted for quality and value, boosting customer loyalty and purchase frequency. Management handles tariff and inflation challenges by rerouting sourcing, accelerating shipments, favoring domestic products, and promoting Kirkland, all while maintaining customer value. Additionally, Costco steadily grows its warehouses and expands internationally, strengthening its membership base and procurement scale. However, challenges remain, such as a digital and omni-channel gap. Costco's e-commerce experience still lags competitors in convenience, especially for small orders in urban areas. Geographic concentration also limits appeal in dense urban locations due to the big box format and congestion. Finally, the business model relies heavily on membership economics, meaning renewal rates and perceived value are critical, and shifts here could impact growth. Costco's competitive advantage is built on several key strengths that work together to create a strong financial and operational model. The membership fee income, which now totals about $5 billion annually, provides steady, high-margin cash flows that allow Costco to lead on price by keeping markups low, which in turn helps maintain strong membership renewals. Their scale and disciplined approach to limited SKUs, along with efficient cross-dock logistics, keep unit costs down, which translates directly into lower prices for customers and faster inventory turns. The Kirkland Signature private label adds another layer of value, with trusted products often made by top manufacturers and priced carefully to avoid inflation and tariff impacts. Additionally, Costco's operational culture focuses on paying competitive wages and offering strong benefits, which lowers employee turnover and leads to better service across stores, including in optical, pharmacy, and fuel centers, ultimately supporting membership renewals. Financially, Costco continues to grow, with sales projected to reach $275.2 billion in fiscal 2025, up 8% from the previous year, and net income increasing by 10% to $8.1 billion. Their margins remain stable around 13% gross and 3% operating, supported by effective inventory turnover and lean expenses, while healthy cash flow supports new warehouse and logistics investments. After fee increases in late 2024, membership fee income rose about 10%, with more paid members and higher executive membership penetration. When it comes to customer experience, Costco focuses on throughput and value rather than elegance, using tactics like treasure hunt merchandising to keep trips interesting, low and transparent pricing to sustain trust, and ancillary services such as discounted fuel, optical, and pharmacy to drive frequent visits and enhance membership value. Their people advantage further strengthens this, as better wages and promotion from within policies lead to knowledgeable, friendly staff and faster service, helping to create a positive, consistent experience that keeps members coming back. E-commerce and logistics at Costco are growing steadily, with pilots like Scan and Go trials and faster front-end technology improving customer convenience while maintaining the value of shopping in-store. The customer base is mainly affluent and family-oriented, but younger groups are increasingly joining, often through online sign-ups. This trend boosts future customer value, even though it means targeted efforts are needed to encourage early renewals and auto-renew options. Costco's success comes from flipping the usual retail profit model by charging members for access to the lowest sustainable prices and then designing operations to deliver value through a limited number of SKUs, strict cost control, large-scale buying, and trusted private label products. Membership fees support this price leadership, which in turn drives renewals and upgrades, creating predictable cash flow and operational discipline. This approach has held strong despite inflation, tariffs, and changing consumer habits. While there are challenges with e-commerce convenience, urban store formats, and reliance on memberships requiring continuous value reinforcement, the company's high renewal rates, growing membership income, steady expansion, and investment in its people make Costco one of the most durable retail businesses. It's a clear example of how disciplined scale can turn slim margins into strong customer loyalty.